Welcome to everyone joining us right now. We're going to get started in just a few moments. We'll just let people sign in. Again, just welcome to everyone who's joining us right now. We're just going to wait a few moments while people get signed in. Okay. Well, I think we're going to get started now. Just a few housekeeping things before we begin. If you want to change the aspect ratio to see the slides a bit bigger or the video a little bit bigger, you can make those changes on your side. There's also audio controls as well. You will find a chat function and a Q&A function. We will have a Q&A session at the end of today's webinar, but if you think of a question throughout the presentation, put it in right away so you don't forget it. And like I said, at the end of the webinar, we will get to those questions. Thank you all for joining us today on this very, very timely and an interesting topic of the 2020 Rental Market Survey results from CMHC. The Canada Mortgage and Housing Corporation, CMHC, is Canada's national housing agency. CMHC works with community organizations, the private sector, nonprofit agencies, including LandlordBC, and all levels of government to contribute to the stability of the financial system, facilitate access for Canadians in housing need, and offer objective housing research and advice to governments, individuals, and the housing industry. LandlordBC and CMHC have had a long mutual partnership, and we would like to thank CMHC for this continued collaboration. Having reliable and relevant data is critical in understanding the rental housing industry across British Columbia. It is also vital to our continued advocacy efforts, providing a common language when communicating with government and the public. This is where you come in. LandlordBC and CMHC need your help in encouraging all landlords to participate in the survey to ensure we have the most accurate and complete data possible. CMHC does a great job of engaging landlords, but every response helps, especially in those smaller markets. As mentioned, this data is vital to our industry and LandlordBC. So please make sure you participate in the survey, but also encourage your peers and colleagues in the industry to do so as well. So today we have a presenter from CMHC. It's Eric Bond. He's a senior specialist in market analysis and spokesperson for Metro Vancouver and the Fraser Valley. Eric provides research and commentary on the new home construction, resale, and rental market developments and their impacts on the housing market. He has over 6 years of experience with CMHC in this role and holds a Master of Arts in Economics from the University of British Columbia. During today's webinar, Eric will share CMHC's latest insights on the rental market and the results of the 2020 CMHC Market Survey. Following a provincial overview, he will examine Metro Vancouver and Metro Victoria rental markets in more detail, including a relative performance of different market segments. Eric will also touch on how the pandemic and economic environment are impacting the sector, as well as look ahead to the future for new rental construction. So I'd like to bring on to the call to our webinar today, Eric Bond. Welcome.
Thank you very much, Hunter, and thank you to LandlordBC and all of you in the audience for the opportunity to join you. It's a pleasure to be here on behalf of CMHC. As Hunter mentioned, I am a Vancouver-based analyst working with the Market Insights team and author of the rental market report for Vancouver for the past several years. So as you may know, CMHC released the results of its 2020 rental market survey last Thursday on January 28th. And what I'm going to start with is a big thank you, actually, to you and all other Landlord BC members for your participation and responses in our survey. This enables us to collect useful information that benefits everyone involved in the rental market. In 2020, our survey covered 95% of purpose-built rental units with 3 or more units in Metro Vancouver, making it one of the centers with the best coverage across Canada for CMHC. We received an excellent response rate of 89%, and your participation is again so helpful here, particularly when it comes to providing the detailed and complete responses with rents and so on, since that enables us to provide higher quality and more precise data for local neighborhoods and specific types of units. The last point of introduction I'll make here is that reliable housing data really is a cornerstone of any informed discussion when it comes to housing, particularly policy. So your responses enable CMHC's Rental Market Survey to be used as a common language for the public, industry, and government in discussing rental housing. And particularly in Metro Vancouver. This is quite important since we must insist that all housing related discussions be grounded in data and evidence. So the Rental Market Survey also enables a wide variety of useful analysis to be conducted, which then generates insights that can be helpful to both landlords and tenants. And so over the next 45 minutes or so, I'll pull out some of the highlights of this year's survey and then situate the results in the broader economic environment. So as Hunter mentioned, I'll start today with an overview of the rental market results for major centers in BC. I'll then get into the economic forces that shaped the market over the past year, including the impact of the pandemic. We'll then do a deeper dive into the rental data for Metro Victoria and Metro Vancouver. And finally, I'll finish up by highlighting some new data that we've introduced in the rental market survey this year. And we'll then have time for a Q&A. That Q&A, you can enter questions as we go along. I have slide numbers in the bottom right corner of my slides as well. If you want to reference a specific slide, we can always go back to that during the Q&A. I'd also like this webinar to be a little bit interactive as well. So we are going to be using the polling feature within Zoom to get some of your take on some of the items and insights that I'm presenting. So I'd like to have our first poll question now, and this is a warm-up, so you can do this directly within Zoom. And the first question is, have you already accessed CMHC's 2020 rental market report? And you can just pick an answer directly within Zoom, yes, no, or who's CMHC? Maybe you're at the wrong webinar, but we are going to be talking about the rental market report today. So we'll just give that a moment, and Hunter, when you're satisfied with the responses, or number of responses, we can look at the results together. Okay, so it looks like 30% of you have already accessed the rental market report, and that's great. About 70% have not, and so I will certainly be providing an overview today that might whet your appetite for some of the additional details that are in the report, and I will have links at the end of the presentation as well. So that was the warm up. Let's now do the second poll question, which will really kind of set the stage for today's discussion. And this question, the 2020 was, of course, an unprecedented year, which is the popular word these days. So the question is, how did your rental business fare in 2020 compared to 2019? Some people may have, found a better business environment. Others may have found that to be more challenging. So again, we'll just give this a minute here. Hunter, when you're ready, we can see the results. Okay, it looks like the most popular response was that business was about the same, but the results do balance a little bit towards the environment being a bit more challenging. So that's interesting. So I'm hoping that through this presentation, I can put some of that into context and also offer a bit of a more hopeful vision for the future as this business environment will continue to evolve and quite likely improve. So let's get started then with the main content of the analysis. And I'd like to just ensure that we're all speaking the same language at the beginning here. CMHC divides the market portion of the rental sector into three parts. The first is the purpose-built rental segment, and that is what I will be spending the majority of today's presentation discussing. We obtain information from this from our rental market survey. We also get information on rental condominium apartments, and that's from our condominium apartment survey, and I will discuss that towards the end of my presentation as part of the discussion for Vancouver. The third segment that we have is that for secondary suites and laneway homes, and unfortunately this is currently a data gap. We don't have any information on rents or vacancies in this segment, for example, so that will not be part of today's discussion. So what follows will largely be a discussion of the purpose-built rental segment. So what happened in BC in 2020? Well, in terms of vacancy rates, Metro Vancouver and Metro Victoria drove an increase in the provincial vacancy rate. So provincial vacancy rate rose from 1.5% to 2.4%, and that was largely driven by a 2.6% vacancy rate in Metro Vancouver, increased from 1.1% in 2019. In contrast, smaller cities saw steady to increasing rental demand, and that actually resulted in lower vacancy rates in a number of centers, such as Abbotsford Mission, just 0.6%. Similarly, Nanaimo decreased in the vacancy rate from 2 to 1%, and Kelowna and Kamloops largely holding steady or slightly decreasing around 2%. The provincial result is going to be driven by Vancouver and Victoria, also due to a sense of scale, because those two cities do combine to about 3/4 of the provincial rental stock. So do bear that in mind as we go through. But overall, this trend for smaller cities seeing more demand is consistent with a pattern that we've seen in other areas of the country as well. So for example, around Toronto, some of the smaller cities have seen lower vacancy rates than are seen in Toronto itself. In terms of average rents, the growth in average rent, this is generally slowed across the province in 2020. That follows a bit of a slowdown in 2019 as well, but certainly with the higher vacancy rates this year, that has limited opportunities for rent growth since there is more choice in the market. In terms of levels, just a comparison across the province quickly, Metro Vancouver has the highest rents here for 2 bedrooms, for example, just under $1,800 per month. It's actually the only city that is above the provincial average, so it kind of drives that provincial average. And many other cities are below that provincial average. And so Abbotsford Mission, for example, next to Vancouver, average rent for a 2-bedroom is about $650 per month less. And on the island, we see Victoria having slightly higher rents than Nanaimo and other cities. The change in average rent is relevant when we discuss turnover rates as well, since when a unit turns over to a new tenant, particularly this year, when there was a freeze on rent increases for existing tenants, when a unit turns over to a new tenant, that's the main way that the overall average rent at the market level can increase, since those units are reset at the market level. What we saw in 2020 was a general decline in turnover rates due to lower mobility, likely as a result of the pandemic. So turnover simply means that, or when a This is the proportion of units that turned over to a new tenant over the course of the past 12 months. And for BC as a whole, that was 13.4%, and in Vancouver, 11.8%. Now I'd like to highlight some new data that we introduced, or the collection thereof that we introduced this year as part of our survey to gauge the impact of the COVID-19 pandemic on landlords. And that has to do with rent arrears. So the portion of units that were in arrears at the time of our survey in BC was 3.2%. And among large provinces, arrears were very low in BC. And so I think you actually have to give yourselves quite a lot of credit for this, since the flexibilities of entering into rent deferral agreements and finding solutions that worked for both landlords and tenants, which I know LandlordBC has advocated for since the beginning of this period. I think those were instrumental measures in having arrears be lower in BC. Note that this is at the end of September, so we did our survey in October, so it could be that arrears were higher before, but certainly this is a very good result for BC and Vancouver in particular. Just 2.6% of units in arrears compared to, say, Calgary at 7.7% or Toronto at 10.7%. Nationally, we also found that 58% of landlords reported that rental arrears were higher in 2020, so certainly an impact there. Another third indicated they were about the same. Last interesting point I'll make here is that the share of rent in arrears was less than the share of units in arrears. And so this is interesting because it suggests that it was primarily lower rent units that were more in arrears. And so that will fit with a broader pattern of the uneven impacts of the pandemic impacting lower income households that were likely to rent units with lower rents more than other tenants. Let's now move on to the main forces that were impacting the rental market in 2020. And I'll talk about both demand and supply measures. And on the demand side, let's first talk about employment. So employment losses in 2020 were concentrated among younger workers. And of course, many younger workers are renters. So this will be relevant for this sector. And while overall employment has nearly recovered to year-ago levels at the end of 2020, young workers remain strongly affected. And so this is what I've shown here in the chart, where you can see that employment levels for 15 to 24-year-olds are still well below their pre-pandemic levels, whereas employment levels for those 25 and older have nearly recovered, or in some cases slightly exceeded the pre-pandemic levels. A lot of this, at least for BC, and BC youth being more impacted than other cities across the country, has to do with the concentration of employment among younger people in tourism and hospitality, both of which are industries that have been significantly impacted by the pandemic. So the impact on the rental market here is that, due to limited household budgets, so they face interruption of earnings or loss of employment, demand both moved lower, and it was also redistributed within cities or between cities to areas with lower rents. The next major impact on demand this year was due to migration. And migration is very important for rental demand, since many new arrivals to an area tend to form rental households. So in 2020, migration to BC from all sources, internationally and from other provinces in Canada, was interrupted due to our closed borders nationally, and then general travel restrictions that were present during the pandemic environment. We had a strong outflow, in particular, of non-permanent residents, and that's what I've shown here in the chart. Your non-permanent residents are international students or temporary workers, and they have, as of Q3 of 2020, which is the most recent data point, they have departed in large numbers. So not only have they stopped arriving, they have actually left. And so that compares quite starkly with, say, the net inflow of 16,000 non-permanent residents that occurred in Q3 2019. So the impact on the rental market here is that, this is a large component of demand, so there will be lower demand with the departures of non-permanent residents, particularly in Vancouver. Many of them tend to, and migrants in general, tend to arrive to Metro Vancouver before then later in a year or two, perhaps fanning out to other cities in the province. The silver lining here is that this impact is likely transitory, since once these travel restrictions are lifted, migration will resume, and the federal government has also announced higher immigration targets for future years to, in some ways, make up for lost time this year. Let's talk more specifically about students. So the pandemic introduced online learning, and this is quite important since now students need not be located at or even near their university campus. So they can relocate. They can go to their parental home. They can go to an apartment with lower rent. They can combine households with other students, for example. Or in the case of international students, they can return to their country of origin. So as a spotlight on kind of one result, we have in our survey a survey zone for the University Endowment Lands in Vancouver, which corresponds to the location of UBC's Vancouver campus. And what we found there is that the vacancy rate in 2019 was 0.4%, and in 2020, that vacancy rate increased to 13%. During this time, there was no increase in supply. So this change is purely the result of a demand adjustment. Admittedly, it's a large outlier in that regard, but it's quite interesting to be able to see specifically the impact of lower demand from students on rental vacancy rates in that area. So again, this impact, similar to migration, is likely to be transitory. So in-class learning will resume at some point in the future. It's not an equivalent form of learning in general so far to learn exclusively online. And of course, international students will also return in future as well. The timing of all this is somewhat uncertain, but we see this impact as being somewhat transitory. In terms of supply, what we saw in 2020 was a continued expansion in rental supply, and this follows several years of elevated rental construction, and so that renewal has been very welcome and very good for the industry. And the steady stream of completions meant that supply continued expanding in 2020. In the chart, we have the growth of the rental universe as a percent, or expressed as a percentage, since the rental universe differs greatly between cities. But interesting result is that the rental apartment universe expanded 2.2% in Metro Vancouver. It may not sound like a lot, but that's actually the highest annual increase on record in terms of units. Growth in the rental stock was quicker in many other cities in BC. It expanded about 5% in Victoria, and you can see there that despite some very large number of recent completions, the rental universe in Kelowna actually continued expanding as well last year through the pandemic. So if we were to put all of this together, demand and supply, on the demand side as a summary, we have renter households bearing most of the economic impact of the pandemic. There's been lower migration to BC, particularly for non-permanent residents that tend to rent. And then with online learning, students can relocate, and so that redistributes demand and lowers it if they, lowers it in areas near universities. At the same time, we've had higher supply, and so there was a continued expansion of the purpose-built rental supply with a steady stream of completions. And we've also had the conversion of condos on the part of investors to long-term rental, and this mainly has been a phenomenon in Vancouver and Victoria, and I'll talk a bit more about that later, but that certainly has added to rental supply this year. If we put those two together, the impact on the rental market has been higher vacancy rates and slower rent growth. But as I've been mentioning, some of this impact is likely temporary. Students will return, and higher immigration targets have been announced for future years. So let's now move ahead to talk about the Metro Victoria rental market. I will be going through some of these details fairly quickly. It's more to give some highlights and drive your interest towards the data tables for the report. If you're looking for say a specific result for a specific bedroom type of unit, we have all of that information. I'm going to be more operating at a higher level to show kind of what some of the major trends are. So let's start with a little bit of a historical perspective. There exists this inverse relationship between the vacancy rate and the same sample rent increase. And what I've shown here are both of those indicators plotted over the last 2 decades. So the vacancy rate increased to 2.2% in Metro Victoria in 2020, while meanwhile the same sample rent increase had slowed to 3.3%. And so you can see how, when the vacancy rate is very low, like say in the early 2000s, was around 0.5% for a number of years, that corresponds with a period of high same sample rent increase. Likewise, in the past few years, we had a similar period, but that market balance has now shifted back towards slower pace of rent increase with the higher vacancy rates that we've seen this year. In Victoria, generally, vacancy rates rose fairly evenly across the metro area. The city of Victoria, the vacancy rate rose to 2.3% from 1%. Similar increase in Saanich. Those are the two largest municipalities. Esquimalt was interesting. This is one of the areas with the lowest rents in Victoria, and so vacancy rate there didn't rise nearly as much, and it's lower. It's 1.4%, so likely part of a affordability story there. A couple other trends: vacancies increased in larger structures more than others, so very large structures with 100 or more units. These tend to be newer and have smaller units, so there was lower demand for smaller units, and that actually fits as well with another observation that there was lower vacancy rates for 3-bedroom units since they continue to be relatively scarce, and in the pandemic there appears to be a demand for more space as well. In terms of rent growth, generally rent increases around the region were fairly mixed, but they were lower in the West Shore. And the West Shore, excuse me, Langford and other municipalities, they are home to most of the new rental supply in the region. And so with those units already being at the market level, the ability to grow those rents was less in the pandemic environment. Rents increased strongly in Esquimalt. As I mentioned, it is an area with lower rents. It's closer to downtown, and so that leaves room for future rent increases. And the last point I'll mention for Victoria is that the gap between asking rents or market rents for vacant units and the rents paid for occupied units, that gap widened. And so that's an interesting result that certainly affects the affordability of the rental stock and the choices of tenants depending on how they want to move. So let's now move over to Metro Vancouver, and I'll go through some similar indicators in a little bit more detail. Again, the historical perspective, like as a someone who works with data, this is a beautiful example of an inverse relationship between these two variables. And so you have the higher vacancy rate this year in 2020, 2.6%. It's the highest vacancy rate that we've seen in Metro Vancouver since 1999, which was in the aftermath of the Asian financial crisis. Rent growth slowed to 2% this year, and that follows several years of quite elevated rent growth, around 6-7% during a period of quite high demand. In Vancouver, if we look around the region, there were not major differences between bedroom types. All saw increases in the vacancy rate, so I'm going to spend most of my time talking about the geographic differences. We did see, in general, vacancy rates rise further in areas with more new rent supply and areas with higher rents. So the city of Vancouver, an area with higher rents in general, we saw the vacancy rate increase to 2.8%. In Surrey, a bit further out, a bit lower rents, we saw vacancy rates increase, but to a lower level. They're now 1.4%. Vacancy rates actually fell in Langley to 2%, and I've included for comparison the university endowment lands as well, just to show the impact of student demand on vacancy rates in that particular market segment. If we expand the city of Vancouver and for a bit more detail, it is home to half of the region's rental stock. So we can see the same trends playing out within the city of Vancouver. Downtown and in the West End, this is more expensive, centrally located rental stock. Vacancy rates increased to 4%. And similarly, actually, in Southeast Vancouver, this is some more expensive rental stock. It's newer construction in the River District area of development, for example. Vacancy rates increased to 5.4%. In contrast, Marpole, Mount Pleasant, East Hastings, older, less expensive rental stock, vacancy rates increased only moderately and remain lower in the region between 1.1 and 1.4%. If we have a look at rent growth around the region and break it into different municipalities, what we can see is that rent growth slowed in central areas with those higher vacancy rates, and also in the inner suburbs. So, City of Vancouver increase in average rent was 1.3%, and that contrasts with Surrey, where rents continue to expand, much as they did last year, at 5.6%. On the university endowment lands with the higher vacancy rate, the ability to raise rents was minimal, and so there was no observed change in the average rent increase. Again, looking at some of the details in the city of Vancouver, we can largely see many of the forces I discussed earlier at play as well here. In Kitsilano, rents actually fell by about 1%, and in the West End, they would have fallen as well, but they did fall, but in the downtown region, they rose. So you put the two of those together, there is a slight increase of 0.7% in the average rent. Many other regions saw a net rent increase of 0. So let's now move to our third poll question, and this one's interesting because with less ability to raise rents, or let me say less of a desire to let rents fall too. Many landlords have turned to incentives in terms of driving occupancy in their buildings. And so the question is, what kind of incentives have you offered at your rental property over the past year? So these are anonymous answers, and I just thought it'd be interesting to share as a group and with your peers. So you can select any and all that have applied. So you could, for example, have offered free rent, free parking, or free amenities as incentives, gift cards or other cash signing bonuses, bonuses upon lease renewal, or maybe you've lifted restrictions in your buildings. If there's something else you've done, you can let us know in the chat. We'd certainly be interested, and you can just flag that as being a response to poll question 3. So we'll give that a minute here for people to indicate if they've used any incentives to drive occupancy in their building over the past year. Hunter, when you're ready, you can put the results up. Okay, so it looks about half of respondents have not used any incentives, so that's interesting. And among those who did, it would seem that free rent, free parking, and free amenities were the most popular choices. Gift cards, other signing bonuses, also quite popular. So thanks a lot for sharing that. Certainly interesting to see as a group what types of incentives have been used. These poll results and the details I will be adding to the slides after in the version that will be circulated to you. So you'll have a record of those results if you want to compare with the peer group. So let's talk about rents now. And I wanted to illustrate, a current market dynamic another way by looking at the difference between rents for units that are currently vacant and being offered for rent on the market. So that's shown in the light orange here on the chart. And the rents for units that are occupied, and that's shown in the dark orange. So for 2-bedroom units in Metro Vancouver, in 2014, you can see that vacant units had on average lower rents than occupied units. And that makes sense since in a more balanced market environment, it's likely that the units that are still available are the most marginal units. So they might be in undesirable locations, they might be older structures with fewer amenities, and so rents are lower. Now, as the rental market tightened over the following years, that spread reversed. And so vacant units, so the current market rent, is now on average a 21% premium above the rent for occupied units. So as an example, like when a 2-bedroom unit, say at 1780, turns over to rent to a new tenant, it comes back to the market at $2,150. So for renters, what that means is that they face a significant rent increase, even if they were to look for an identical unit across the hall or across the street. And depending on the length of their tenancy, that's really because the current rent that they're paying for the unit could be far below than the current market level. So for 2020, the main result here is that the gap between the market rent and the rent for occupied units narrowed. It stopped growing after a number of years of accelerating, a divergence. And in fact, the market rent did not change, and that's interesting, perhaps due to the use of incentives that we just talked about. But meanwhile, based on the turnover of units, the average rent paid for occupied units continued increasing, since those newer units, since units that are newly rented are closer to the market level. So this is a friction in our market. It creates, significant challenges for rental affordability for many tenants and could even discourage moving in the long term, though we don't see systematic evidence of that at this time in Vancouver. I now want to talk about actually something I'm quite excited to share, and that is some new data that we have that's long been requested by members of the industry, and that is rents and vacancy rates or characteristics basically for buildings that were newly completed. So this is, we've separated out in a separate table the characteristics for buildings completed in the past 2 years only. And what you can see is that they generally, perhaps unsurprisingly, rent for a higher level, about a 45% premium above the rent level for units of all ages. And in terms of vacancy rates, it might also come as no surprise that vacancy rates for these units are higher, quite a bit higher. So compared to 2.6% vacancy rate overall for Metro Vancouver, for newer buildings completed in the last 2 years, the vacancy rate is currently 9.1%. So I think the rent premium is certainly having an impact here, as there has, with the impacts of the pandemic, been lower demand for higher priced units. But I think also that it's likely that some operators of newer buildings are holding out for tenants to pay their asking rents, and so they might therefore accept a longer lease-up period for their building in order to achieve those rents. I'll mention also that in the data table that we have accompanying the report results, that there are more details by municipality and unit type than what I've shown here, but this is certainly a flavor of this new information that we're happy to make available. The next piece of new data I want to highlight is very interesting. It concerns rental affordability as a function of the incomes of renter households. And so if you'll indulge me for a minute here, this is probably the most technical or economics chart I'll show all day, but basically the idea is that if we compare the distribution of renter households' incomes relative to the distribution of rents in the rental universe, we want to make a comparison between what a household can afford and what units are in fact available to them. And so, as an example, if you were to be a renter household at 50% of the income distribution, hopefully in an equitable market, you would be able to afford, by spending no more than 30% of your income on rent, about half of the units in that market. And so that's what's represented by this 45-degree line. Any point along this line, the proportion of units available in the rental market to the distribution of income would be the same. Now, unfortunately, this is not what we find. And so for Vancouver, the distribution looks like this. And so what it means is that there are significant imbalances in the Vancouver rental market that pose challenges in particular for lower income rental households. So as an example, this point here means that just 24% of the units are affordable to renter households in the first 40% of the income distribution. So that leads to naturally lower vacancy rates due to higher demand and competition in this segment. By comparison, if you look actually at the first 20% of the income distribution in Vancouver, only 0.2% of the market rental stock would be affordable to them. So that basically means that they can't participate in that segment, and they might have to look to the non-market segment or spend more of their income on rent than would be considered affordable in order to meet their housing needs. So access to rental varies across cities. In Toronto, it's very similar to Vancouver, and there are significant challenges for lower income households. However, in Montreal, the situation in particular for lower income households is a bit better. And so the first 20% of the income distribution in Montreal can actually affordably access about 15% of the rental stock. So certainly a little bit closer in terms of matching the population to housing that they can afford in Montreal. I plotted Calgary as well. Calgary, the distribution increases quickly because incomes in general are higher in Calgary. So this, again, is new information. It's something we're certainly going to be using to help understand where there are, the greatest challenges in terms of, housing need and access to affordable housing, and certainly rental is a very important component of that. So the last major topic I'll develop for Vancouver is the condo market. And so I'm going to compare the purpose-built segment and the condo rental markets briefly here. Condo vacancy rates have remained low across the board in 2020, and this actually will likely always be the case. And that's simply because, the cost of vacancy to the individual investor is actually very high because they only have one unit. And so rather than have that unit sit empty, they're more likely to sell their unit or adjust the rent. And indeed, that's what we've seen. And so if we compare rents between the two segments this year, previously condos routinely rented for about 15 to 20% more than an equivalently sized purpose-built rental unit. That gap has now actually narrowed to about 10% or less. In downtown, actually, the premium has essentially been erased. Previously, there was a gap of about $300 per month that condos would rent for $300 per month more than purpose-built apartments, and that gap has now been eliminated. So I think that's partly due to lower demand, but in the condo sector, it's also due to higher supply. And what I'll just mention here quickly is that investor-owned condos are an important source of new rental supply in the region, and we've seen a impressive expansion in that supply of condos in the long-term rental market over the last 2 years. So in 2020, about 7,000 7,000 condos were added to the long-term rental pool. About half of those were new units that were recently completed and bought by investors, and the other half, which is shown in dark blue here, were existing units that had been converted to long-term rentals. And there's a variety of reasons why in the last few years, investors have been increasingly converting their units to long-term rental. In 2020, those conversions were likely influenced by lower tourism demand for short-term rentals, and so they found more steady returns in the long-term rental market. So in summary, for Vancouver, some of the key observations that I've highlighted are, the higher vacancy rate, so it's now 2.6%, and slower rent growth that we have in the region. The turnover rate also slowed in Metro Vancouver, and that's on lower mobility, and also I think on the increasing or the elevated gap between market rents and rents for occupied units. We've also had redistributed rental demand towards more suburban areas with lower rents, and that's due to the impact of the pandemic on renter household budgets. The purpose-built rental segment in the region faces a couple of headwinds. There is lower migration that I mentioned to the region. That's particularly important for Metro Vancouver, since its population would decline without migration. So that has reduced rental demand significantly. We also have rental condo supply growth that's providing increased competition to the purpose-built sector, and rental affordability itself is a challenge for many households, and limiting demand in some cases if the number of households who can actually afford the rent is quite small. The region also has a number of tailwinds for the sector, and actually new supply in the purpose-built sector is an important one of those. It provides more choice to tenants. It also provides some renewal for the sector, and both of those are actually important as positioning rental housing as a long-term viable choice for more households in terms of meeting their housing needs. The other tailwind is that many of the impacts, particularly on demand that we've seen this year, are likely temporary. So students will return to in-class learning, and we are expecting migration to resume when borders open. And of course, higher immigration targets have also been announced for the next few years. So I'll stop here with the results. I would certainly be very interested to hear how you use the CMHC Rental Market Survey in your business. So if Hunter, we could bring up the fourth poll question. Again, you can select all of the choices that apply to you if you use CMHC's rental market report and data in your business. Your responses here will certainly help us, shape where we put emphasis on the report in the future, as well as areas where we can improve or offer new capabilities. So we'll just give that a moment for people to enter their responses. And Hunter, when you're satisfied, we can continue. Okay, thank you so much. And yes, seems like a lot of people use the report to understand trends in their local market. So we will certainly continue to cover those markets as best as we can. So thank you very much. Let's continue then. I just have a couple more resources. These will be useful links to you when the PDF version of this report is, or this presentation is circulated. You can access the report as well as the data tables that accompany it. You can also access all of the rental market survey data via our online data portal. There's a link provided here as well, and this is where you can really select the neighborhood level results that are most of interest to you. So thank you very much for your attention and for your ideas on any future ideas you have on how to improve CMHC's rental market report. I hope this information is useful to you in your business. And the last poll question is just a quick rating of this presentation, and your feedback is certainly helpful to me. And Hunter, when you're satisfied, we can then move on to the Q&A, and I look forward to answering your questions, whether now or later via email if you want to reach out. Thank you very much.
Thank you very much, Eric, for that great presentation. Lots of very useful information and a unique look at, of course, how this information, this report can be used, and the vital importance of it. Just to reiterate again, as I mentioned at the beginning, it's really important that all landlords across British Columbia participate in this survey. It provides us with incredibly useful information when it comes to understanding the industry in general, but also, of course, when communicating with government and the public. As mentioned by Eric, it provides that common language that we can refer to when discussing specific markets and the province in general. So definitely please make sure that you participate in that survey and encourage your peers. And thank you again to CMHC for that collaboration on this. So we're going to get into our Q&A. As mentioned at the beginning, there is a Q&A tool that you should find where you can put your questions in. So we'll try to get to as many of these as is possible. So one of the questions that came in early on here is around the city of North Vancouver, very specifically, but I think it can be applied really to any market. Is the data skewed perhaps by the new construction, new purpose-built construction that, as you mentioned, have typically had higher rents than the buildings that were built in the 60s and 70s. So what are you finding with that?
Okay, so how do you best use the information given that, in many cities across Canada, really, actually, we have, a lot of kind of older stock, and then there was no construction for about a period of about 3 decades, and now there's new construction and newer builds that are coming online with higher rents. So there's a couple of things I'll mention that can help. First of all, we do have when we're looking at rent changes, we look at the same sample between each year. So we're excluding, the impact of new structures that came online that year. So the structure has to have been in the survey for both years in order to be included in that rental comparison. The second piece is that there is a dimension that I have not talked about at all in today's presentation, but we do have estimates for rents and vacancy rates by year of construction of the building. And so you'll find those both in the data tables for the report that are linked earlier on the slide, and also on our housing market information portal. So if you want to benchmark your rents against buildings of a similar age, that is certainly possible using those more detailed results, since you're right, you might well be operating in different market segments. Does that address the question, Hunter? Or?
I think so, yeah. So,
yeah? Okay. So
certainly
a couple of different options, yeah, exactly.
Exactly. And that data is found through the report and through the CMHC housing portal as well, correct?
Correct, yes.
Yeah. So perhaps if you could just comment on, is it specifically slide 8 and some of the disparity that we see between Victoria and Vancouver, the two kind of major population centers in the province?
Okay, I'll just go to slide 8 here so we can bring that up again. Okay, this was about rent arrears. All right. So, I mean, as I mentioned, the main differences are between provinces. I don't have a lot of specific insight to say as to why arrears were higher in Victoria than they were in Vancouver. Perhaps that's a discussion that you can have amongst yourselves as an association. But what certainly stood out to me, is that regardless of whether it is Victoria, Kelowna, or Vancouver, the proportion of units in arrears on a national scale is very low. These
Of course.
cities are doing quite well, and so I think that's actually a very good result for British Columbia. So I'm sorry I don't have anything more specific to say on that. It's also the first year that we've collected this data, and we will, I anticipate, we will collect it again in future, so that will then provide a basis for comparison.
Definitely. Well, a unique year to say the least. So when looking at the average rent, when you use the term average rent, does this include or exclude the cost of utilities?
Okay, good question. So we do not control for that in the survey, and we do that because it's very complicated to control, but B, it tends to wash out in the grandest sense. There are in general, utilities are not included in a lot of rents in BC. That's not obviously going to be the case everywhere. So it's not as much of a factor here. Where it is more of a factor is actually in other parts of the country, or particularly colder parts of the country. If your heat is included, this is actually quite a big deal. And so for a lot of British Columbia, it's less of an impact. Of course, in the north and the interior, that can be quite an important point of differentiation for your property as well. And so if you are including that, certainly that's worth advertising and so on, right? So I think that's about all I can say on that, Hunter.
Fair enough. And I mean, that's something that we see very clearly when talking with our members and landlords, that, sometimes the utilities are included, sometimes they're not. Depending on municipality, there's different types of utilities. So certainly a complex thing, just the base rent itself.
Yeah.
Great. We'll go to another question here. Looking at someone's referring to slide 23 and wanting to know if that same data is available for other places as well, including Victoria.
Yes, so this is the slide with vacant and occupied rents, and so it's something we've introduced in the last couple of years, and it is available for every city where we conduct the rental market survey across Canada, and they're all CMAs anyway, and it's also broken down by all the zones within that as well. So you'll find that in the data tables that are linked at the end of the presentation. I've highlighted it here for Vancouver for one bedroom type, but it's available for all bedroom types. It's available for all major survey zones within the city. So quite useful if you want to know what the market rent, so look at that vacant rent, if you want to know what the market rent is currently in your area.
Definitely. So with the data that you discussed about the condo universe and bringing in, you said there's been an increase in supply through investor purchased condos. Is there any data on the age of these condos that are being provided, that are being added to the universe?
The short answer for that is no. No, not. I mean, we have a little bit of information, say, on the size of the building. I don't believe we have any information on the age of the building. This is a slide I skipped over that kind of, compares the change in the universes between the two segments, but age is unfortunately not a dimension that we have.
Okay. Um,
Actually, I'll add one more thing on that,
yeah.
if I may. If you go in this slide, when we're talking about, condos being added to long-term rental, like here it's split into conversion of existing units and then number of new units that were recently that were added that were completed in the same year. So your light blue bars here are additions to the condo rental supply that were brand new that year. So you can see that it's always it's always positive, and it's can be quite a significant component that it is investor owners bringing brand new units to the long-term rental supply, and if they later sell the unit, those units might move back into home ownership, for example. So
And I think we have time for one more question. When looking at the different type of rental unit types, you break it down in the report by number of bedrooms. So starting with a studio up to 3 or more bedrooms. Is there any look at the square footage of rental units as well in relation to the rent rates?
Very good question. Not in this survey, unfortunately. We do get some information on square footage of housing units in general. For example, from the Canadian Housing Statistics Program from Statistics Canada, but it is not a dimension that we capture in the rental market survey. We do capture square footage a little bit when we look at starts and completions, so new units that are being constructed. And that data is published separately, but it's not, you wouldn't be able to attach a rent to it. So if you're looking for a dollar per square foot measure, that's not something that CMHC's rental market survey is able to provide.
Fair enough, and it is something that I think that would be fairly difficult with there is a high degree of diversity of sizes of rental units, even within the same bedroom size unit.
Oh,
So
it's absolutely interesting, and it's a very relevant question. I think the other, at a certain point, a choice was made on the burden of response to the survey as well, because in addition to collecting rents and so on, we would then have to be collecting square footage as well. So maybe
certainly,
with more electronic responses, that's more feasible these days than say it was, I don't know, 50 years ago when the survey was started, right? But yeah, it's certainly something I can take away and explore with our data team
certainly.
going
Well,
forward. So
well, thank you so much, Eric, for that, and thank you to all of our attendees for your attention and your thoughtful questions. We will be sending out the slides from today's presentation as well, likely in the next day or so. So watch your email for that, as well as information for our upcoming webinars. Thank you, everyone, and have a lovely day.
thanks, everyone.